Hey everyone, it's Jared and Matt bringing you our weekly market update for the week ending Friday, May 25th. We have a shortened trading this week due to Memorial Day on Monday, and I'd like to take a second to thank all of our veterans out there, and especially those that paid the ultimate sacrifice for our freedom.
As always, we'll strive to give you everything that you need to know about the markets in 5 minutes or less. We'll start out with the returns from last week, we'll cover some news, and then we'll wrap up with our thoughts going forward.
Last week, the three major U.S. indices were all positive, with the S&P 500 up about 0.3%, the Dow was up about 0.2%, and another strong showing from the NASDAQ has the technology index up over 8% for the year. Emerging markets and foreign stocks were both negative for the week, with emerging markets still down over 1% for the year, and foreign stocks had the worst week out of all the indexes we're looking at, down over 1%, and Matt's going to go over one of the reasons why that happened. The chart that we have in front of us today is of the US dollar, and this chart basically shows the relationship between the strength of the US dollar and our major trade partners, and is heavily focused on that relationship between the US dollar and the value of the euro. Now, as you can see, since April of this year, the strength of the US dollar has continued to increase, and if you look at the chart towards the top, that blue line is a clear resistance level for the US dollar at 95, and as we get closer to that level, we're looking for a breakout in the strength of the US dollar over that 95 level. If we get up over that level, there are a couple pros and there are a couple cons of the strength of the US dollar. Now, a stronger US dollar means that traveling abroad can be cheaper, imports can also be cheaper, and foreign companies that do US business, their investors could potentially benefit. A few cons in a stronger US dollar is that US tourism becomes more expensive, exports can suffer, and also domestic companies that do business abroad, they'll actually be negatively affected by the stronger dollar.
We were beginning to see the fallout from Italy's election last week, as two-year bond yields in Italy are spiking to over 2%. Prior to the election, that same two-year bond actually paid a negative yield or negative interest rate. We're also seeing this translate over to putting downward pressure on the foreign markets and foreign indexes, as Italy's a major part of that index. In other news, crude prices on Friday declined by over 4%. And that was directly related to Russia and OPEC both coming out with a joint statement saying that they're going to increase oil production until oil drops under $60 a barrel. And lastly, earlier in the week, President Trump tweeted an open letter to North Korea stating that he is going to be canceling the North Korean summit. And that was directly related to rumors that North Korea is not going to comply with the denuclearization agreement previously stated. And then Kim Jong-un later in the week came out and said that they're going to fully comply with all of the prior arrangements. So hopefully this is just a negotiation tactic by President Trump and the North Korean summit will continue as planned. It seems like all we've been talking about for the past week has been news from overseas.
Hopefully all the events associated with oil, Italy, and North Korea don't derail a really strong earnings season that we had here in the US.
Thanks for watching, and as always, we strive to give you everything that you need to know about the markets in 5 minutes or less.
If you can, like our Facebook page and share our video. Last week we had over 2,500 views, so let's shoot for 3,000 this week. Thanks a lot.